The Bank of England has announced it will intervene in markets to avert risk to UK financial stability. This follows the International Monetary Fund Committee, an international organisation in place to ensure the stability of the international monetary system, calling on the British government to reverse tax cuts for the wealthy.
Well, the pound, of course, had another fall back to 106 this morning, but it was the bond markets that's really spooked people. And, of course, with all the criticism of the Chancellor's financial plans, the White House even calling for the UK government to show more fiscal discipline, despite Kwasi Kwarteng's confidence that his plans for economic growth will eventually pull through. He'd been meeting bankers, mostly from US banks, this morning at the Treasury. Well, let's get some expert analysis with our economics and business editor, Liam Halligan, with On the Money. Have you got your tin hat on?
I think this is definitely emergency action because the Bank of England is doing something outside of the usual monthly Monetary Policy Committee meetings. Now, it just so happens it's a quirk of fate. There isn't a monthly Monetary Policy Committee meeting scheduled for October. They basically do 10 a year. The next one's in November. And the bank felt it had to do something to prop up not just sterling, which gets all the headlines, but as you rightly say, the bond market, where the government sells its debt in order to help the financial, the fiscal balance add up, paying for public services and so on. And what the Bank of England has effectively done today, it said, rather than selling government debt, it's going to start buying government debt. What does that mean? It basically means, in layman's terms, the Bank of England will be helping the government to sell its debt rather than doing something which may make it harder for the government to sell its debts. Now, some people will say that means the Bank of England is being political. Other people will say no, because if borrowing costs go up, and what the Bank of England is trying to do is put a lid on borrowing costs in the market, then that itself will be inflationary. So this may be part of the bank's mission, its mandate to control inflation.
And mortgage lenders, if we bring it right back to our street, mortgage lenders withdrawing mortgage deals, they will inevitably come back, but at a worse rate. Some quite dire predictions of mortgage payments going up really significantly and house prices going to fall. Is this inevitable? Can the government, the Bank of England...
No, it's not inevitable at all. I mean, look, my general take, right, is that the notion that the currency markets have gone bananas because of a top rate of tax move that costs a couple of £1 billion and may actually make the government money, right? You may make money from the tax rate lowering. The government may get more money. The notion that the currency markets are really worried about that, I think that's a political take, with all respect. I think the political class want that to be the battle. What's really spooking currency markets is the cost of the energy price cap, right? And the cost of the energy price cap, this is like hundreds of billions rather than a couple of billion. The cost of the energy price cap, in turn, depends almost entirely on the wholesale price of gas, which in turn depends on what's going on between Russia, Ukraine, whether or not pipelines are being blown up underneath the Baltic Sea, getting gas from Russia to Germany. But we must bring it back to ordinary viewers and listeners, you people at home, Gloria, as you say. And this is not an emergency interest rate rise by the Bank of England. That doesn't mean interest rates won't go up when the Bank of England next meets. This is not an emergency interest rate rise. This is an attempt by the Bank of England to try and dampen down interest rates in the markets, which are the interest rates that the mortgage providers use to lend money to people who are trying to buy a home. It doesn't affect existing mortgages if you're on a fix. We must say that. But if your fix is ending, this time next year...
1.8 million due to end next year, 2 million already on those fixed rates now.
That's right.
Variable rates now, forgive me.
That's right. 2.2 million mortgages in the UK are variable, OK? And some of those will end soon, as you say, Gloria. So this is emergency measures, but I wouldn't say, this is like the first step on the ladder of emergency measures. And we must maintain perspective.
Yeah, well, let's get a political perspective as well, because, of course, we saw the bankers meeting, Liam, at the Treasury this morning with Kwasi Kwarteng. I think that's Andrew Griffith may be there. Who's
He's
the new city minister?
He's actually
city secretary.
Financial secretary to the Treasury. That's like number 3 or 4 on the ministerial rung.
These are the bankers, all the American banks, let's also reflect. We're talking about Bank of America, JP Morgan, Citi, Standard Chartered, Morgan Stanley. So do you think there was a reaction from the Bank of England to what was going on to actually maybe bail the government out in a little sense?
Come on,
to calm things down?
Back up. There's no bailout. This is not a 1976 IMF.
Well, they're going to be buying bonds at a huge scale, unlimited bond buying.
Cap in hand moment. We're not having a bailout discussion here, and the IMF, in its criticism this morning, which is serious, I grant you, and is unprecedented in recent times, that certainly, worsened the mood on currency and bond markets. There's no question that the British government isn't going to be able to finance itself, at least on the metrics that we're seeing in financial markets now. So we must keep this in proportion. Having said that, you're both completely right. And what we try and do here on GB News is always bring it back to our viewers and listeners. If you have a mortgage at the moment and the fix is ending soon, you will end up paying a higher rate of interest, possibly quite a lot higher rate of interest than you currently are. And in that situation, some people will then be, they may have to replan. They may have to sell their house and buy a small.
And also,
I just want to press you though on this political perspective, because when you've got the White House and the IMF commenting on the husbandry of the UK economy, that is not good for a brand new government, is it?
No, sure, but the IMF, with all respect, where I used to work, and the White House, they comment on lots of things that turn out to be nonsense.
Okay.
They said if we voted for Brexit, we'd go into a deep recession immediately, which we didn't. And let's be completely clear. Let's bring it back to brass tacks. Joe Biden is no friend of the Conservative Party, we should add that the IMF just a few weeks ago was saying that Britain's fiscal consolidation, raising corporation tax and raising national insurance was premature and wrong.
Liam, Kwasi Kwarteng has hinted that when we have that budget, well, he's more than hinted, he has said that that budget in November, the proper budget with the forecasts, etc., that he will set out plans there to get our debt under control in the medium term. Now, when I read that, I thought, well, doesn't that mean cuts to public services? Because what else do you do?
Public spending, yeah.
Well, public services, so hospitals, schools, public sector pay. What else could be in the firing line?
I think, you're right, Gloria. He announced just when we were at the Labour Party conference that the next fiscal statement would be on the 23rd of November. I think, I'll chance my arm here, hostage to fortune, I think, given that there's no scheduled MPC meeting in October, just by the quirk of fate in the diary, I think November the 23rd is a long way in the future, and I think they may need to bring that forecast forward. A lot of this depends on growth. If they can put forward a credible plan for growth that shows signs of working, in the end, the markets will forgive them. But look, financial markets are not always rational. There will be a group of people in the markets connected by WhatsApp who are placing big bets on the pound, shorting the pound. They're placing bets which mean they make money when the pound goes down. And they will be doing everything they can to test the government's courage and attitude, because if and when, I'm not saying it will happen, but if and when the pound moves towards parity with the dollar, that's a really big headline moment, and they feel the government and the Bank of England may try to defend that parity.
And what about this relationship between the Bank of England and the Treasury now? Because, of course, there were indications that maybe there was some frustration with Andrew Bailey, and he'd been a bit too slow to move on interest rates, and we'll see in November how far they go with that.
Yeah.
But, the Treasury actually coming out publicly and saying, we reaffirm our commitment to the Bank of England's independence.
I think they had to say that because, as I said at the beginning of our little discussion here, some people could say this is a political move by the Bank of England because they're doing something which helps get the government out of a hole to sell its debts more easily. On the other hand, if debt prices are going up, that's inflationary, so the Bank of England is trying to control inflation.
Part of its remit.
And until very recently, the Bank of England was doing, for the last 10 years, the Bank of England has been buying bonds in the market. It's called quantitative easing.
Had quite a nice little pile of them,
We're going back to quantitative easing. We're going back to what we were doing until 3 months ago. But let's be in no doubt, this is definitely an emergency measure because it's outside of the usual schedule of meetings, but it is just the first step on the rung of emergency measures. And for now, at least, the pound seems to be, and debt markets seem to be holding relatively steady. But we shall see.